Good morning. Glad you're joining us this morning. If you have any stocks you want to review going into today's trading session, please let me know in the comments. Right now, I'm looking at how the SPY's performing. Look like we bounced back, gap down from the 392 levels. Currently showing more down signals to the downside. I'm sure that's going to have an effect on stocks going into the day if we don't rebound at market open. Should provide us with some great buying opportunities though. So as long as we don't break down too hard, I've heard some expectations of going back to 380, things like that, but looks like we're holding on pretty strong here. So who do we have with us this morning? If you could, please drop your name in the chat. Just a quick good morning. Hope you got your coffee with you. I do. Go ahead and share this with the chats. The gents at the chats. Copy link. Scoot that over there so I can get to them a little easier. Yeah, so apparently people think that my channel should be called Weed and Stocks because they claim that I'm high based on the analysis I've been given. Apparently I don't do DD here. But whatever. Good morning, Justin. How are you doing? Glad you're with us again. I think this is your second or third morning with us. I appreciate it regardless. If you would, feel free to share this on Facebook with other people that you might think is interested. Twitter, wherever. We got somebody else joining us already. If there's any stocks you guys want to review, feel free to drop it in the chat. Let's see. Let me do something real quick. Move that over here. Right there. All right. Do I? What are you talking about? Second morning. Okay. Well, glad to have you here regardless. As you can see, we're currently seeing some pullback in the markets. Got back down to the 390 levels. Currently still showing signals of coming down. Like I said earlier, this should provide us with some potential buying opportunities in today's trading session going into the end of the week, to be set up for the beginning of the week. I actually stated in our chat that I was going to be placing some shorts on some of these high runners from the week. It seems like Thursday is always a devastating day for most of the stocks that run up from Monday to Wednesday. I'm only shorting them on their way down to potentially gain some profits to basically place a position on the reversal. That's my strategy. That's one of the strategies I'm working on here with my account. What I'll be looking for going into today. I know that some stocks that have ran, for instance, SOS ran yesterday. As you can see, we gapped down here as well. Currently showing signals on the EMA that we could drop out. We were seeing those same signals here, which is where this turns red. But it found some support. It was simply compressing from that breakout and bounced back up to the 14. But now, as you can see, we're down to the 11. How I'm looking to play this is see if we find support above this 11.19 price range. Let me pull some of this stuff out here. Let me get rid of my drawings as well, so we can start over basically. Stock broke out pretty well over the course of this week, leading into last week to this week. As you can see, the stock is currently up almost nine. What is that? 400% at its peak. Currently showing signs of a potential drawback. This stock specifically runs consecutive or parallel to Bitcoin, and let me see where Bitcoin is at this time. Let's see. Bitcoin still sitting at 51.5. See if we're showing a slight pullback on it as well. If you would give me a second, real quick. Alright, I'm back, guys. Seeing Bitcoin pull, you sold all of your ZOM yesterday. I think ZOM actually broke down to those 212 levels I was looking for before bouncing back up. Yep, did almost exactly what I expected. Found some support there before continuing to try to go back higher. Looks like it tried to rebound to the close from what is that, Tuesday, but it was rejected again. A lot of people might say this is a buying opportunity. Some people might think it could be a full pullback. I base it off of what the trend's showing me. Other than that, it's just speculation, so be careful. Once again, with ZOM, those 212 levels, as you can see, are key. But it does look like it might be losing a little bit of steam here. I'm not saying that it's going to just fall out, just to be clear. But, you know, if we retest those 212s, I'm pretty sure it's coming back down a little bit more than we would like. Our next key level would be around the... let me adjust this because I'm starting to see something here. Let me pull my intraday volume out, so we can kind of identify some of these levels a little bit better. We had it set at the 148. Looks like 152 is key here as well. But of course we could find support at the 194 as well. But it just depends on how strong the momentum to the downside is. Is what I would expect out of this. Hopefully you were able to profit off of ZOM. I don't know what your initial position on the stock was, but we could, you know, find support at 212 and keep trading sideways within this 212 to 291 channel. I'm not saying that's impossible, but as you can see, the current, if you were to do a trend line, showing a trend to the downside, which could cause it to compress. I'm not saying that this is necessarily going to drop out. I want to make that clear. Just because I say a stock might pull back, it might not. Not going to be correct 100% of the time. I don't expect to be. But just looking at this now, if we break this 212, then we're breaking this current descending triangle, which typically you would see a breakout in this compression area here. So keep an eye on it if you do still have a position in it going forward. What I did want to do is focus on some stocks that actually did meet our criteria. I looked at NXTD over the past few days, and we were stating that if it broke above the 249, then we would see some strong upside support, which it retested at 334 precisely as I expected before being rejected and coming back down and finding support up here. I never said it was going to find support at the 249, but I would always look for support around the 249, and that's what it's currently showing signals of. As you can see, it broke out, had some issues staying above the 334, rejected, gap down pre-market. It's starting to look like everything gapped down this morning. Yesterday everything gapped up. So with things gapping up, you can see we kind of dipped going into the end of the pre-market session before gapping up, and then, you know, bracing for another downfall. It looks like it tried to find that support on the 211, and then that's when it finally broke out through the 249. Let's see. The EV market is down right now. I think Tesla ultimately is weighing it down in itself, being the market leader. So if you have any EV plays that you're going after, EV is currently down due to green energy issues and things that are occurring with Texas. I know it's a big controversy between what is what, blaming it on green energy, blaming it on natural gas, blah, blah, blah. It doesn't matter. Like, all that matters is the situation that people are living in right now, in my opinion. And in my opinion as well, the markets are not correlating properly with what's actually happening on Main Street. A lot of this stuff is pumped up a little bit higher than I'm comfortable with, but that's my opinion. Anyways, looks like it's just me and you right now, Justin. I know it's a little bit early to be doing this, but I want to try to capture some opportunities going into pre-market so that we can potentially optimize on the pullback for today. So what I'm going to do is open up my TDA account. Give me a second. Let me get that pulled up. Pull up our market watch list. And what I'm going to do with this morning session, since it's just a few of us, can you go over SNDL? Sure. Of course. Not a problem. Let me pull this up too, though. Where is... Let me pull that back over there so you guys can be watching it. Detach. All right, this is our liquidity scanner. What it looks at is where the most money is traversing or trading throughout the markets. As you can see, our typical TSLA, Tesla, Apple, Amazon, Microsoft, Riot, all the big names that typically are here this morning. Of course, CCIV is a stock I've been seeing a lot of conversation on. QS, another. QuantumScape, pretty interested in QuantumScape long term and what they're doing over there. I'll get into more of a review on it later today. I'm not gonna. That's one thing that I want everybody to be aware of, is that I don't do strong DD in these coffee and stock sessions because we're just looking at the current trend going into the day. What I will do is create individual videos for people that wish to have them done, and reviews over them with a little more in-depth information about this, specific trades. So, SNDL, or Sundial, excuse me. We're currently showing pull back to the 178. Of course, this is currently dealing with, I don't think a lot of people are aware of what's going on at SNDL, but they just conducted a $1 billion shelf offering, which basically says that they're adding more shares to their float, and the money that's collected is basically put on a shelf for them to access whenever they need to. Another thing to take into account as far as the company behind this stock is that they are already a debt-free company, so having additional access to $1 billion now allows them to basically tap into that to initiate potential, business strategies and operations that they can continue to do as far as possibly acquisitions, expansion, just overall general overhead of the company. But looking at the stock, if you really pay attention to something I don't think people are aware of, we're finding strong support actually at the 175. And that was a previous level of support before it broke out. Of course, this had to do with the retail investor surge into the stock. So I don't want to really say that just because we're at these support levels again, well, they were once resistance, but now that they're becoming support, I don't want to say that we're going to see this occur again. But I do want to say that I'm expecting to see some upside on the stock. We can pull in some of my indicators here. I was looking at this on the 1 hour, I believe, last night, and it was kind of, giving me signs of this compression here that we're at for a potential breakout. And as you can see, going into pre-market, we're actually turning green here. Our volume flow index is meeting our MACD, which is typically when breakouts occur. I'm not saying that's what's going to happen here. RSI is pretty low. The volume weighted MACD is headed back to the green side. So coming into this pre-market, looks pretty confident that we could potentially rebound from this pullback. But I want you to be aware that a lot of this pullback has to do with that shelf offering, and more shares coming into the market. But anyways, looking at it, we actually have like a 311 price target on this stock once it does get past all of this craziness that's going on with it. A lot of people are losing confidence in the stock. I do want to add to that, for the simple fact that it is down, and a lot of people are potentially bag holding bags rather. But at least a reversal to the 211 would be great to justify what's going on here. Anytime you have an offering of any type, you're going to see the stock price come down. And I think they announced that at the beginning of the week, which would kind of explain what's going on with this trend that we're looking at on the downside. So looking at SNDL, I'm actually looking at buying some $1 calls on the stock again. It's 78 cents deep in the money, so I should be pretty safe. I don't think this is going back to $1 because of all of the investor sentiment into it, and how sorry, I'm reading comments here. So what's a safe percent to sell if you don't want to be in a stock long term? I'll get to that in just a second. That's a great question though. But SNDL, we're looking for it to hopefully rebound off of this low end 177. We're going to buy some $1 calls. I have made some money off of the stock, so I might look at going ahead and placing an equity stake going into the end of the week, beginning of next week, to hold longer term. So we had a question from Justin. What's a safe percentage to sell if you don't want to be in a stock long term? Any of the stocks that we suggest from our platform are focused on a 10 to 20% target. Okay. If it's above that, then we have exit strategies for it going higher than that. I would focus on saying that I think the average rate of growth annually for most traders, I think, is like either 6% or 9%. Currently, we're sitting at like 86% on the trades that we have pushed out, and that is not including the stocks that we have still open. That only accounts for the stocks trade alerts that we've closed. So if you don't want to hold long term, I mean, you just have to have an exit strategy to the upside, right? So what I look for in my exit strategies, I really don't set price points outside of the key levels that I point out in our sessions that we've had. I look for those key levels to come into play and help me determine, okay, if we reach this price point and we see some strong resistance here, then I'm going to go ahead and get out. You know what I mean? If I'm up 100%, one of my sell strategies, I call it a split and run. If a stock goes up 100% on it, I'm selling half of my position to secure my initial risk. And allowing the profits to continue to run. And with some of those strategies coming into play, potentially you're able, once a stock goes up 100%, that's normally when we start seeing our retail investors surge into the stock, which causes it to go up another 100%. So in that split and run strategy, you're able to capture half of the position to secure your initial risk while allowing the profits to continue going another 100%, right? So at that point, you're initially trading free shares. Scalping, the way we scalp might be different from everybody else. I'm not sure if you're on Discord or Facebook. I think you're on Discord, Justin, but you can DM me on there, Millennial Investments on there, and I will tell you how we scalp. We scalp half of the percent gains that the stock is up. Everybody else might be different in how they scalp, or what's the industry standard or whatever that I might not be aware of in scalping, but that's how we do it. Is if a stock's up 25%, I'm going to scalp 12.5% of my stock. If it's up 50%, I'm scalping 25%. And that's just my method of trading. might not work for everybody, might not be the, best way to do it or whatever anybody wants to call it, and that's fine with me. It works for me, and I think growing as an investor, that's something for you to determine. I don't want to set rules for anybody because every trader is different, everybody's circumstances are different, and that's what you have to consider in placing your trades. It's not about following somebody else's trading strategies just because they're making $1 million. You know what I mean? That's my thing. And even with our trading strategies here, we're just expressing our way of thinking and the way of trading that could potentially be a universal way for everyone to use or even build a strategy off of. It's not some set standard. We want to make sure that everybody understands that too. So another stock I think Justin pointed out to us was OEG, and I want to bring that up again because let me refresh it. I watched it this morning. It broke down below trend line on us. But the stock actually performed very well for me the other day. As you can see, it broke out from that 848 level and hit $10. That was actually the close going into yesterday. From what is that, Wednesday or Tuesday? It's Thursday today. That was actually the close from Thursday. And as you can see, we found support. We're finding support here, even in pre-market at those 848 levels. So this could potentially, bounce again. I would love for it to. I'd buy another option on it right now. Let's see what else we got. I do want to focus on something else that if I don't have people adding stocks to the chat, what I'm going to do is StockTwits is a website that basically tracks the conversational trend on stocks, as well as the percent gain or percent loss for that individual day. One of those companies that is trending now is PLUG. I actually think in our trading group, we have people that have a position in this stock, and I wanted to bring it up to, basically look at where we're at with the stock. We actually reviewed it over the weekend too. And as you can see, I stated before, if we break below the 60.04, we're going to retest the 49.75, and that looks like exactly what's occurring here. Although on the 1 hour, we are going in an oversold status, so we could see it rebound. But to point out this key level again, the fact that we're hitting it right on point. Why did I identify that being a key level though? That's my next question. Was it based off of historical trend, or I think I might have dug into this a little bit more in depth on a lower time frame, and that's where I identified it from. So let's look at it from the 1 hour to see. Yeah, and as you can see, we gapped down strong this morning, about $3. But this might actually be a good play to potentially call, in my opinion. Let's see where we're at. Let's readjust this for a second and see where it plays a part, because that was a previous level of resistance. Let's see if we can find support at those levels. Nope, we actually gapped down here again. So let me spread this out a little bit more so we can kind of see. Well, I want to take away my indicators. Yeah, so we were supposed to find support at the 55.98 yesterday, and as you can see, we did pretty strong, but it gapped down to the downside this pre-market session. People might look at this as a buying opportunity into the stock. I wouldn't blame them, but just based on the chart and its current indicators, we could have some long way down to go moving forward. Potentially, if it keeps in this trend, I mean, that's a strong EMA gap down, in my opinion. That's what I would call it. We could come back to 46, and that's my thing about it is I'm looking for better entry points. I'm not looking at a stock just because it's down to buy it right then, right? Like, I'm looking for the best entry and the best exit. And a lot of people have a lot of issues with the best exit, but I'd like to use Tesla as a perfect example. Tesla, for example, real quick. Came down here to the 780s, 778s yesterday. I had actually bought a call option on the stock, um, and sold it here at the 880s. No. I'm wrong. That is not right. I bought a call option down. I think it was where's yesterday's trading session? Yeah, down here, and it bounced back to the 798s. And as you can see, as soon as it hit 798, I sold. A lot of people would say, hold the call, whatever. But as you can see, we got down. We're almost right back to where we were when I first bought the option. I'm glad I sold it. It actually helped me resurrect my account after opening up yesterday, because yesterday's morning was almost like a slaughterhouse. Once again, a level of resistance we had to get past was the 780. And it was having trouble staying above it and finding support, and that's why we broke down again. I actually bought it in this area. So we had came up, I was green about $100. I bought 2 option calls, and then it dropped back out on me. But at the end of the day, it rose, and I sold about 2 o'clock yesterday. And I'm glad I did. 2 o'clock being right about in this area. And as you can see, it gapped down. It went up a little bit more. I could have caught $4 more on the upside, and whatever the delta would have provided me there, but broke down on us. And what I was getting to is that people might say buy the dip right here, because yes, Tesla is a long-term hold. I'm not saying nothing's wrong with Tesla. I'm not saying not to buy Tesla right now on this dip, just to be clear. But I'm just pointing out the fact that we're showing a pullback on the stock, man, and you can potentially find a better entry into it if you allow it to do what it's going to do. Key level being 780 is the fact that we're only $2 above that, and currently coming down. It's actually at 781.85. So I feel like if we break below that and don't show signs of momentum back to the upside, we could be coming back down a little bit on this stock. And as you can see, it dropped almost $100 within this week, over the course of from the 10th. So today is the 18th. So over the past 8 days, typically, or the past 5 trading sessions, give or take. Well, actually 4, because we were out Monday. It's dropped $100. So me saying that Tesla could potentially pull back to 686 again, signs that it is. That's all I'm saying. I'm not saying it's going to. I said there's potential that if we don't hold support above the 780, then we are, yes, potentially going to retest that 686, which is fine. It's a better buying entry. People talk to me like I'm just psychotic sometimes, and I don't understand why they're so mad at me giving my opinion on the stock. I just reading the chart, man. That's what the chart says. And I say that because we already broke that level of support at the 780. If it was going to be anything otherwise, then we should have hit that 780 and had a complete reversal, which we attempted. It hit that top EMA and then fell right back down, gapping down this morning in pre-market session. So something to watch out for. I did pull up some watch lists going into the day. Tesla, of course, being our largest liquidity stock. Liquidity meaning the most money value in trades conducted in a trading session. But let's look at some runners in our liquidity stock. So Twilio, TLR, Y, of course, we can look at. I think they performed better on earnings, and we saw it bounce just a little bit to 32.96 currently pre-market. I think it had an actual strong bounce to the 36 levels, but it's right back to where we were pretty much yesterday. A little bit lower than where we were on Tuesday's trading session close, about $4. I had actually expected at this point, sometime in this point, that TLRY was actually going back to $28, and it did. I bounced right back off of that, and I told everybody, look for TLRY entry around $28. Even with yesterday's earnings, you would have been up $8, which is close to 25% on the trade. And on that $36 breakout. Now, current trend showing to the upside there. Let me zoom in on this a little bit. This is our current trend based on our levels of support. So we could potentially see this, heading back to the 40s. Let's see where we would be March 1st. Showing signs of going back to 45.73, just based off the actual trend that it's on now. I don't want anybody to think that I'm stating that's where the stock's going to be and they go buy it and then they get disappointed. I'm just saying, based on the current trend that it's trading on, we're looking at March 1st around the 42.95, just to correct it a little bit based on these two support levels. And it's not a bad prediction. But of course we got to break above that 35 level first and find support to the upside. If what could happen is we're actually in what you call an ascending triangle. Typically what could happen is we hit this 35 level here and break down under trend, and then we might start trending on the bottom side of that. And if that is the case, then we could be looking at this anywhere between that $35 level and $42 level, just on a price projection going into the 1st of March. And I'm only trying to point out different strategies or different possibilities to look at going into these trades. I'm not saying that it's definitely going to happen. Not saying that it's not. But I just try to be aware of my price points and what I need to look at going into a trade so that I know how to play it, which feeds back to Justin and his question on what's your a safe percentage to sell if you don't want to be in a stock long term. I don't think there's necessarily a safe percentage to sell unless you're down more than 5 to 10%. So we have a suggested 5% stop loss that minimizes risk to the very minimum loss rate, but we have a 10% sell threshold. And what that means is we set an alert at 5%. How we trade that theory is we set a sell alert at 5%, and then we analyze the chart to see how it's performing. And then if it starts moving to the 10% and negative 10%, then we sell it. That's our exit strategies to the downside. Exit strategies to the upside, we're looking for at least 10% minimum, 20% max. If a stock can fall in between that margin and is showing signs of a reversal, we get out of it. It could bounce and we miss out on a lot of other profits, but we base it on the trend. I had a person comment. I'll read the comment to us just so we can point something out that I really want to take the time and point out. And that is, where was it? Give me a second. Let me pull this up, because it really kind of bothered me that somebody was using my channel as a place to push this type of information. And I'm not here to pump anybody's head up on any particular stock. I am here to only do my trend analysis. I do provide DD on my stocks. And anyways, he says, do you even know anything about the company, or are you just blindly running and reacting to graphs? You kids need to do your DD. This is a $40 to $60 stock. And what he was referring to was OTLK, which I did an update on. It was a trade that we had alerted on back in the beginning of January, and it was up 25%. I just wanted to give everybody a an update on that. But what he failed to see was I did another review on the stock about 3 to 4 days later, where it was up, I think, like 233%. Some crazy number. So let me go to content here. Let's see, content. And in our trade alerts, we actually do DD. And what I'll do is I'll pull up the stock itself. We initially alerted on this stock. Let's see. OTLK. We alerted on it at 132 on the 22nd, which is right about here. And what's crazy about it is you see it gap down almost what was that, 30 cents before it broke out. And what he's trying to say is this is a $40 to $60 stock. Well, that's speculation because the stock is not currently that value. So until it is that value, you can't say that. You can't continue pumping this into people's heads until it's $40 to $60. Now, within our trade alert and our updates, we never said get out of the trade. We did imply on doing our split and run and that consists of, we got into this at 132. It dropped down on us, wasn't performing too well. But as soon as it hit 268, we would conduct a split and run right here. And what that means is we take half of the profit or half of our position out to lock in our initial investment, allowing for the stock to continue higher as it did. And we never said sell that leftover 50% of the position. You can hold this because it's still running. You could have scalped 50% more here and captured the initial investment there and allowed the money to consolidate a little bit. You could find a re-entry right here and, put the 50% of the profits you took out back into the stock here. But of course that you're now risking your profits again. So why not just let your initial position, what's left, which should be about close to 25% of the initial position, here, initial amount of shares. Let me clarify that into the stock longer term. You're trading on free money that was gained by free money, if that makes any sense. And you can let that sit there while you secured your initial investments twice, in theory. So, I just want to point things out like that. We do our DD on companies. That's why we alerted on this stock. So if we provide that to you, it's not just off a whim and just because the chart shows that it's going to perform like that. But perfect example is of doing DD on a company and the charts being insane is your AMC. When's the last time you seen somebody go to the movies? Even to this day. Yet the stock's up from $4 to $28 a share. Insane. We can look at that now. It's probably right back down to where it started at this point. Let's see. Which I'm not going to get into this whole AMC spill. Yeah, we're actually, before all that started, we were looking at the stock because we were seeing volatility stock or volume spikes in the stock, and it was around the 412. So we're only at the end of it all, it's still only up $1.40, give or take. 45 cents, 49. All right. So if you want to consider DD on a company and then compare that to how the chart can perform, this is a perfect example why his argument doesn't make sense to me. But anyways, we do our DD here at Millennial Investments. We hope that you do your DD. We actually have a due diligence database that you can access and log your own DD for stocks to refer to later. That's a community tool, meaning that one user can come in and put information in about a company, and another user can come in and put in information about that same company, and it logs both of their DD, and they both can view each other's. So utilize that. I don't think there's too many places on the web that actually allows for DD to be collected, and that's one thing that we strive at. It's a free tool too, so you don't even have to pay for that. If you're a free member, you have access to it. The public can view it as well. Like I said, it's free. Anyways, I'm not gonna harp on that too much, but do your DD, know what stocks you're getting into, make sure that you're confident in your trades and you're not just going out on a whim because a whole bunch of people are talking about a specific stock. But anyways, I do want to point out one stock that broke out 200% this morning, and that is G-Tech. And what I wanted to look at together was why. And this is doing DD. This comes after Greenland Technologies reported deal with SOCMA, or SOCMA, to support U.S. production of electric industrial vehicles. No terms disclosed. So there's a cooperation agreement to support U.S. production of electrical industrial vehicles between SOCMA and Greenland Technologies. I would definitely look into this to kind of get an outlook on when they plan to actually start rolling out these vehicles, if they're actually a proven leader in the manufacture. Let me read the DD to you, or I'll pull it up for you. How about that? Let's read this together. Let's research, since apparently we don't do DD here. Where's my news? All right. So it says technology developer, manufacturer of electrical industrial vehicles and drivetrain systems for material handling machineries and vehicles. And then the second company, a leading company specializing in designing, manufacturing, and distributing heavy industrial machinery and vehicles, today announced a cooperation agreement to utilize existing supply chain and certain technologies to support Greenland's production of electrical industrial vehicles in the U.S. The agreement also represents a commitment by Greenland to invest in the U.S. as a key center of innovation in the global electric vehicle market. Under this agreement, both parties intend to establish a strategic partnership to fully cooperate on technology sharing and supply chains for the production of electrical industrial vehicles in the U.S. They have agreed to provide and supply GTEC the materials, parts, components, and related supply chain required for the development and manufacture of electrical industrial vehicles in the U.S. Agrees that GTEC shall use the relevant technologies and patents involved in GTEC's procurement of engineering vehicle parts and materials from SOCMA free of charge. GTEC will capitalize on its global business development and technology to accelerate the launch of U.S. vehicles. What I'm looking for is some stronger dates, some future dates. I guess they're not going to provide that in this necessarily, but this is definitely something to dig more into, so you can kind of have an idea of when they expect to have this completed, when they expect to have this rolling out. And that'll kind of give you a timeline on the growth of the stock. Stock currently being up $22, roughly 300%, give or take, a little short of 300%, showing 198 on, or 200%, I'm sorry. But definitely something to look into. Stock topped out actually at $27, so almost up 300%. In today's pre-market session, I would watch how this goes. I wouldn't just dump money into it now. Like I said, identify your key levels and look for a potential pullback on the breakout before just dumping into this. So like right now, I would not buy into this stock for the simple fact that I'm looking for it to consolidate first. One thing that I would like to point out is the fact that this had a key level of resistance there for a minute. So we could potentially, let's do this. To identify a potential entry, what I'm trying to say is go to the top of here, to the bottom of here with a fib retracement. This could potentially, which feeds into the narrative I was about to state, could potentially pull back to the 1731, which you could find a much better entry into the stock versus buying it where it's at right now, just based off of the news and the run that it's having. That's the current trajectory. Let me correct that a little bit. That's the current trajectory. So by the 19th, which is tomorrow, we could be right back down here, around that 1731 level at 50% retracement. That's if it even breaks below these two levels on the Fibonacci retracement chart. Something definitely to look out for. Something definitely to watch. I haven't seen too many industrial vehicles, EV plays coming to the market. I'm actually going to take the time to add the stock to my EV list. Although the EV market is being weighed down by Tesla pulling back. So there's a bunch of entries coming in, but just make sure that you do your analysis before just saying, oh, this is down, let me buy into it now. Just to find a better entry points. If you feel like you missed the entry point, then that just confirms the move back to the upside. That's fine, but at least have the patience to find an entry point versus just jumping into the stock because of news, because you think this is a longer term investment and you don't care where it's going down to now. Optimize your profits is all I'm trying to say. to anybody. I'm not saying anything other than that. I've tried telling people, wait just a little bit longer, and they buy into something while I'm still telling them to wait just a little bit longer as a suggestion, by the way. And then they're like, "Oh, I'm down," and I was like, "I'm just trying to tell you, there's a better entry coming. Allow it to come and capture it. If you're really hell bent on making the most profits out of your dollar, then you gotta have some patience, and that's something that I'm still learning myself." With certain things, but it's helping me find key levels of entries and key levels of exit strategies to optimize not only money I can make on the way up, but protecting my profits when stuff's coming down. So looks like we're finding strong support on 22.85 currently. Let's see if we stay there going into market open. This could explode as retail investors come into play here. We're 11 minutes, I believe, from Robin Hooders being able to hop on to the gravy train, so they could take this through the roof, or this could definitely come down. If it blows up out of this current trend, then we are looking at a potential watch out for halts going into the stock today. If you see it growing too fast, have your finger on the trigger to sell, for the simple fact that if it goes into the halt, people start getting worried and pulling their money out, and the stock just drops out. These are things to keep in mind. I'm not saying to do. Apparently, suggestive ideas is something not taken very well here, so I just want to make sure everybody's aware of that. But I will look into an entry for the stock around the 1731. Potential calls, I'm not even sure if they have calls yet, being that they were just under $8. They may, though, which will be a great... No, they don't. Oh, computer locked. They don't currently have calls, so you can only basically buy an equity stake in the company. I wouldn't mind buying a share or two, just to let it sit, because I'm focused on a short call day. Because it's Thursday, I have a new strategy that I'm trying where I go into the week with option calls, and come Wednesday, Thursday, I start buying some short-term shorts, by the way, just to catch money on the way down and throw that profit into the equity. One thing I want to point out about SOS, we're breaking down out of its trend pretty heavy. I mean, we're down from when we initially started talking about it. I think it was at 11.55, showing signs of reversal. We're down almost $1.30 at this point, and I expect this to continue selling off. This is a Bitcoin play. One of the Bitcoin stocks. I need to create a new list for that. Bitcoin stocks. This was running because Bitcoin was running. Let me rename that. And I expected Bitcoin itself to have a pullback to some degree. I'm not saying heavy. Let me correct myself. But it's not forever just going to keep going straight up. And let me add that BTCUD. As we can see, I use Bittrex for my crypto. It's currently sitting at 5109, which is actually having a strong pullback to the upside, but we're having some strong resistance here. And this is on 10-minute time frame. If we look at it from this standpoint, still stands out the same. But I would look for it to potentially pull back to the 48,209 if it does pull back. Let me be sure that I make that statement. Anyways, back to our Bitcoin plays. I'm gonna add SOS. From what I hear, DPW is a good play. Mogo is a good play. Is it MGI? I believe is a good play. You got PayPal in this sector now, so PYPL. You got Square. I might be missing some, but I'll gather them all up, and that way I have a quick list to look at. But looking at SOS at least. Let's see where DPW is. DPW's I had some calls on this, man. I sold them too early. Missed out on like $200-300 on the trade. Kind of irritated on it, but it opened up pretty terrible yesterday, as you could see. Going into pre-market, we were all the way down to 578. But as you can see, it also found support where it was previous resistance, and before it gapped up last time, I should have identified that. But I didn't expect it to jump an entire 798. That is a key level now, 798. I want to identify that moving forward. That I will be watching for. I'm going to see how that correlates. Yeah. 1094 is next after that 798. So look for that. I actually stated that if we found support above the 638, we were going to run. We retested those levels. That's this orange level you can see right here. We retested it multiple times, found rejection. It dropped down, found some strong support around the 602, and that's when it bounced. I think it bounced. I'm not sure if it bounced off of pure momentum or if there was any type of release done. So going into today, I'm looking to see if it'll pull back or not. I don't think. Let me see something. DPW has some put options here. I'm not saying it's coming down, but I would be interested in capturing some of those gains on the way down to conduct a reversal on the way up as well. So that's how I play it. You don't have to play it like me. That's just how I play it. Yeah, I see a lot of interest that the stock could potentially hit the $5 levels once again going into March. Just ideas, by the way, not necessarily ways I'm going to do it, but just certain ideas that I'm looking at. So, oh yeah, we're already below 699. That was a strong rejection at 797, I'd like to point out. Anybody got any other stocks y'all want to review while we still have some time? It's 7:55. I've got a few more minutes before I get ready for market open and everything like that. If you have any stocks you want to look at, please add them to the comments. If you have a position in the stock, please add your price average so we can base our analysis and discuss the trade based off your current position. I'm starting to realize, I guess this is too early for some people, but I'm trying to catch some of this stuff pre-market. Going into the trade because we're also focused on how the market's, actually being in the market and focusing on the market as it's opened. But if anybody has any trades they want to look at, let me know. Otherwise, I'm going to spend the next 4 minutes letting everybody know to be sure to connect with us on Facebook, Twitter, Stock Twits, Trading View, and we have a partner Discord channel, Investors Talk Trading Group. It's a educational community. It's free to access. It has great educational tools and material to reference and learn how to grow as an investor and trader yourself to make better investments and trades. We have a free chat on Facebook to access. You have to be approved to get into it, but you can connect with us by going to facebook.com/mymillennialinvestments. Send us a message there. I will shoot you a friend request from my profile in order to add you to the group chat. If you haven't already, please be sure to register your free or premium membership, whatever works for you, at Millennial Investments. That's mymillennialinvestments.com/memberships. You can find the link in the description below to join our investor community over here, where we're working together to put together information regarding potential trades that some of our members may be interested in, as well as people just from the general public as they're researching stocks on the internet. We have a premium trade tracker where you can track and log your trades as you go through your trading sessions. I know a lot of brokerages. I know TDA does not have anything where I can quickly look back on my trades. I'm not saying they don't, but this allows you to do so a lot quicker. Would like to also point out that we have a discussion board that you can share information, share videos, and hold conversations with all of our other investors. We're currently looking at potentially making a portfolio management piece to help you apply the free trade alerts and premium trade alerts that we provide. How to apply that to your own portfolio and manage it properly, lowering your risk, improving your profit gains. If you're interested in that, feel free to leave a comment in the comments below. If you haven't already and you're new to this, please be sure to like, subscribe, and also hit the notification bell in order to receive notifications about our next coffee and stock sessions, as well as our free daily trade alerts and our daily reviews that we do on the trades. If you have a trade that you want to look at and you weren't able to join this session, add it in the comments below, and we will do an individual review or a recap on some of those trades that were missed in the conversation. Looks like I got a few minutes here, so I'm going to go ahead and get ready to cut this short. Thank you for watching. If you joined us this morning, I look forward to doing this at least once every morning, pre-market, getting ready for the day, following the trades that we start out with at the beginning of the week and how they progress, showing you how these key levels that we identify apply to the trade and how well the trade continues to follow those guidelines based by the set by those key levels, and why we trade like that. But other than that, thank you for watching. I appreciate you for being here. Like I said, if this was helpful in any kind of way, please be sure to like the video. If you are interested in showing support, please be sure to share this with other members in your own trading communities on Facebook, Twitter. It'd be very helpful to make this more of a group discussion moving forward. I know 7 o'clock is early for a lot of people. It's early for me myself, but I'm trying to do this where we can catch trades going into the day, pre-market, and review trades that everybody wants to look at. So that's what this session's about. It's about the trades you want to look at. I can look at trades all day. I do that by myself, but I'm really more interested in looking at the trades that you're looking at and giving you a better idea of how to play them, or just another opinion. So if you're interested, continue to join us every morning about 7 o'clock Central Time. We will do a weekly recap on Saturday at 10 a.m. Central Time, going over the previous week and also looking forward with the future forward-moving outlook into the week to come. So any questions, like I said, hit us up in the comments. You can connect with us on all of our social media platforms. Links are in the description below. If you haven't, feel free to join our investor social network at Millennial Investments. Link is in the description below. It's free. So once again, thank you all for watching. Thank you for joining this morning's coffee and stock sessions at Millennial Investments. I appreciate your time and participation. If you have any questions, leave them in the comments below. Have a good day. Good luck trading. Be smart.